Hey traders, Akil Stokes here, Chief Currency Analyst and Trading Coach over at TradingPower.com, and thank you once again for joining me for another weekly video. Originally, I wanted to talk about the RSI and how to use that with price action and structure-based trading, but due to a few recent events in my live trading room this week, I thought it would be more important that I focus on the topic of trading strategies and do you have one? Now, before I give you my opinion on that topic, I want to show you some footage from Wednesday's Warroom meeting that Jason Stapleton did with our syndicate members. So it's about 2 minutes long. Take a look at it and then I'll be right back at the end.
That if you want to be successful, here's what you have to do. You have to find a trading plan that you've tested, that you've verified, that you know will make you money over time, or at least historically has done so, and that's the only measuring stick that we have. And once you have found that thing, to be able to come in every single day and do that over and over and over again. And that is the surest and fastest way for you to go from being unprofitable to being profitable. And what tends to happen is guys come in after feeling beaten down and not being very successful, and they watch a few of the videos online, and they say, well, this guy really seems to know what he's talking about. He really seems to get me. He seems to understand what I'm going through. And you want to know why they feel that way? Because I do know what you're going through. Because I have already been there, and I have already done all of the stupid things that you are doing right now. And I've also been working with traders long enough for years that I have heard it all. I have seen it all. And everybody wants to pretend that they are different, that the issues they're dealing with are different, or that their psychology is different, or their issue is just different. It's not. You are all dealing with basically the same 6 or 8 problems. And to give you an idea of that, I tell you guys that one of the books I suggest that you read, there are 2 books that I really suggest everybody read. One of them is Market Wizards, because it gives you a feel for the fact that it doesn't matter what your style of trading is, it doesn't matter who you are, it doesn't matter where you come from. You can be trend, counter trend, long-term, short-term. You can trade systems, trade structure. It doesn't matter. You can make a ton of money trading using any of those strategies. A lot of people tell you, well, counter trend systems are stupid. You should only trade with the trend, or you should never trade low time frames or high time frames. Market Wizards puts all of that to bed. It is nothing but a list of stories and interviews of successful traders trading everything that you can possibly imagine. And what you should walk away from that book understanding is that regardless of what style you trade, you can trade based off astrology and be successful, because there are guys who do it. But whatever strategy you employ, you have to have a system. Every one of those guys in that book will talk to you about the importance of having the system and being disciplined about what you follow.
So if you haven't gotten the gist of it by now, the point that we're trying to get across is that having a trading strategy is important. It doesn't really matter what type of trading strategy you have, and we'll get into that a little bit later, but you need a plan of action. If you don't have one, it's no different than gambling. It's no different from going to casino and just, throwing your money on the table and crossing your fingers saying, okay, I hope it works. I hope it works. Another analogy would be trying to build a house without a blueprint. Sure, you can get some of the work done, but all it takes is that one crucial mistake and boom, the whole house comes down. And for your sake, it would be a trading account. I actually had a trader this week post on one of my YouTube videos talking about how they blew an account on the euro dollar. And we want to avoid that at all costs. So having a trading plan is important. And this topic came up in the live room when a trader asked me, hey, Akil, what do you think about this type of trade at this level? And of course, as an educator, I always answer that question not by giving you a yes or no answer, because it really shouldn't matter what I think. What matters is what's in your plan. So I always ask the trader, okay, well, explain to me, why did you enter this position? Now, I do this a lot. Charles does a lot with our trader assessment. What we're looking for is not really to tell you whether your trading strategy is right or wrong. I don't really care unless I've personally back tested your strategy and on the same pairs, on the same time frame, using the same exact rules, and my numbers came out negative. Who am I to tell you that you're trading the wrong way? That's not my place. My job as an educator is really to make sure that you have a plan, make sure that you have solid rules for why you're trading. So whenever I ask a trader to explain to me, hey, okay, why did you enter this area? I'm looking for a sharp, quick response. Hey, Akil, I got involved in this area because RSI was overbought, lower low, lower close entry technique, stops went here because it's 1 times ATR, target went there because it's previous structure support. That's the type of answer where it's like, okay, well, it's apparent you have a plan. You know why you took the trade. You just have to do that consistently. And I want to assume that your strategy has a positive expectancy. The answers that kind of raise a red flag for me are the ones where it's like, well, I entered there because it looked good. Or whenever you hear terms like, well, maybe, usually, those are all red flags. So I'll ask the trader, I say, well, what made you enter there? It looked good. What was your entry technique? Price action. Well, that doesn't really tell me much. Well, why are stops at that specific level? And they don't really have an answer. And we try to nip that in the butt as quick as possible. And we tell the traders, hey, the first thing you need to do is stop the bleeding. You should stop trading now because it's obvious you don't have a plan for why you're trading and you're only waiting for disaster to happen. Yes, you could get lucky a few times. I mean, after all, the market's either going to go up or down, right? It's a 50-50 chance. Yes, you're going to get lucky sometimes, but eventually it's going to catch up to you. And that's one of the things that separates the professional traders from the rest of the traders. I remember when I was on a demo account, I won all the time. I would have hot months, all the time on a demo account. As soon as I started trading live, I struggled to put that consistency together. And the truth will be told, over time in this industry. You can only fake it for so long. Eventually, if you don't have a consistent plan of action with a consistent execution, you're going to be called out by the market. And usually that comes in the form of massive losses. So we want to avoid that. So I don't know where I'm doing this off the top of the head. I don't know where I'm going with that. But the point is, it doesn't matter how you're trading. You want to have a plan. And I know Jason brought up a book in the clip I just showed you about Market Wizards. That's a perfect book to read for newer traders or any traders because, again, it emphasizes that you don't need a specific plan. There's no one way to make money in the Forex market or in trading in general. Despite what a certain viewer of my YouTube videos says or thinks, and you know exactly who I'm talking to, that guy that leaves those negative comments and has been getting into it with a few of my followers who thinks there's only one way to trade. I recommend you read Market Wizards. What Jack Swagger does is he takes the best traders and he proves that all of these top traders, they all have different techniques. They all have different strategies. They all have different plans, but they're all successful. And they're all successful because of core principles. This isn't a magic system like you think. It's not a magic system. It's about having that plan. It's about having discipline to execute that plan and the ability to do that over and over and over again consistently. So I recommend that you read this book, especially since you're going around saying that your plan is the only plan that works and everyone else should be, relegated to the hells of trading because they don't trade the way you do. Sorry about that. A little personal beef I've had. Usually I keep that inside, but I'm a little fired up today. But anyway, let's go over to the charts for a second, and let's look at an example of a plan that you can have. Now, it's just an example. I'm not saying go out and trade this, guys, but it's going to give you an example of using that if-then thought process to really create consistency in your trading. All right, so we're over here on the blank chart. And again, I want to give you guys just an example of what a plan looks like. I'm not saying that this is a technique or a strategy that you should go out and trade. I just want to give an example of how to use that if-then thought process. Let's say you're a trend continuation trader, meaning that you're a trader that looks to hop on a trend. Here's something that you can do. So the market, we know if the market's in a downtrend, let's do an uptrend, let's do a bullish trend. We're looking at movement like this, right? Swing low to swing high, outside return, swing low to swing high, outside return. Here would be an example of a trader that doesn't have a plan. Okay, Akil, I entered right here. So I told the trader, why did you enter at this moment? Because it was a pullback. Well, the whole thing was a pullback. What told you to enter at this specific price level? I felt like that was the turning point. Well, what on the price chart allows you to see that was the turning point. Was the RSI oversold? Was there a double bottom? Was there previous structure, a certain candlestick formation? It just looked good at that level. And again, that's an example of a trader that doesn't really have consistency in their trading. And, one time they're going to take the trade right here. The next time they're going to take it here. The next time they're going to take it here. And there's no real consistency at where they're executing the trade at. There's no plan. They just kind of go off of really where they feel like getting involved in. And usually that's driven off of two things: greed or fear. They're scared that the market's going to push down and they're going to miss it. Or they're greedy and they're going to wait to try and get the best entry technique or the best entry spot where they should have got involved at a different place. What you want to do is you want to be consistent in your analysis, consistent in your execution, because that's the only way in the long run to tell if what you're doing is actually making you a profit. Many traders are out there trading something that they think works, and when they go back, it's funny. We have a bunch of traders that do this. They come through the 12-week transformation course. We have a heavy lesson on back testing, right? And they'll come through the course and say, "Hey, Akil, I trade this way." And then once they learn about back testing, I always encourage the traders, hey, you don't have to trade the way I trade, but you got to develop it like a business. And a lot of them will come through the course and they'll come back and say, "Okay, well, guess what, Akil? Remember that strategy I told you about I was trading earlier?" I'm like, "Yeah, okay. Well, I went back and back tested it and I saw that it doesn't actually make money. So I wasn't a bad trader before. I was just trading a strategy that wasn't profitable." And you'd be surprised at how many times that happens. You'd be surprised at how many of you guys out there are trading things that aren't consistently known to make money. For example, ABCD patterns by themselves. I used to think that if I just traded every ABCD pattern, I would make a good living. Later found out that they're not even profitable by themselves. You got to add filters to it. But anyway, an example of a trader that has a plan, that has a strategy, they would say something like this. All right, so they're a trend continuation trader. They're looking to hop on the pullback and ride this up to the next level. So an example of a plan would be, hey, John, how do you, you're a trend continuation trader. You're waiting for the pullback and you're looking for the extension, correct? Yes, Akil. Well, where do you enter? Well, I draw my Fibonacci retracement from the previous swing low to the previous swing high, and I wait for the 618 to be hit. That's going to be my level for entry. Okay, John, do you enter right at the 618 or can it be before it? Well, Akil, it has to at least hit the 618, but once it hits the 618, the trade is valid anywhere between the 618 retracement and the lowest point of our previous outside return. And now we have a zone right here. Okay, John. Well, after, let's say this, if price action hits the 618, how do you know when to enter? Well, Akil, if price action hits the 618 retracement, then I wait for the RSI to go oversold. Okay, next. Well, if the RSI goes oversold, then I use a higher high, higher close entry technique, or I wait for a higher high, higher close candlestick formation. All right. If I get a higher high, higher close candlestick formation, then I enter next bar market. So that's looking at something like this. The market pushes down. Let's say we get to here. And again, these are just examples, guys. Let's get to here and then boom, market gives you a higher high, higher close. So John's saying if price action gives me a higher high, higher close, then I enter next bar market. All right, John, where do stops go? Well, stops go 1 ATR under the lowest point of our swing. So 1 ATR below this low point right here. Where do targets go, John? Targets go at a retest of previous structure highs. And John set himself up with a trade that looks like this, right? Boom. He's got perfect rules. There's no hesitation. There's no, I usually enter here, but sometimes there, but I might enter there. No, John has specific rules on where he's entering, what he needs to enter, where stops go, where targets go. And then typically when we're doing these trader assessments, we'll even trick them up. Okay, well, John, what if we get a higher high, higher close that comes all the way up here and it sucks up a lot of your potential reward and increases your potential risk? Do you still take the trade? Well, Akil, if I do not get at least a 1-to-1 risk reward ratio to target ones, then I cannot take the trade. Or if I get less than a 1-to-1 risk reward, then I wait for an alternate reason for entry, say a double bottom or something like that. So again, a simple strategy, but the point is, I hope you guys see that if-then thought process. There are rules, and this is how we want to develop our traders, because this is the only way you're going to be consistent. If you don't know why you're entering the trade, if you don't know where you're entering the trade, if you don't know where stops are going and where targets are going, what are you doing? It's going to be very, very hard to be a consistently profitable trader. Yes, you can get lucky for a while. Luck always always runs out. And in the worst scenarios, you get lucky just enough to go live and increase that position size, and it runs out as soon as you're trading that massive, 2 standard lot position size, and you catch that big loser. And we don't want to see that happen to you. We don't want you guys blowing accounts. So I don't know how this video is going to turn out. It's kind of off the top of my head. Again, it wasn't planned, but hopefully I got the point across that having a plan is important, guys. It doesn't matter what your plan is, but it needs to be it needs to be rule based. You need to have a set idea of where entries, stops, and targets are going to go on each trade. And it needs to be testable, verifiable, and repeatable. And what that means is that it should be something written that you can give it to anyone and they should be able to test it. They should be able to verify the results through back testing, and that they can repeat it real time in the markets. And that's what a good trading strategy needs. So probably not my best video. Let me know what you guys think. Again, it's a little rushed. But I don't know. I'm tired. No sleep last night. The little guy just started walking, and then he's got a cold and got about 2 hours. So anyway, hope this was worthwhile. I'll see you guys next week. Oh, before I leave, I'm going to be doing a Google Hangout next Friday during our non-farm payroll reports. It's something I do at least once a month. So if you're not subscribed, make sure you subscribe to the YouTube channel. That way you get notified when that Google Hangout is. I know it's going to be next Friday. I believe that's November 7th. I do not know the time yet, but once I post the event, it will tell you the time. So make sure you subscribe if you're not already, so you know exactly when that event is coming up. So don't forget about that. Until next time, guys, plan your trade your plan. Have a great weekend.
That is critical. And the other one that I suggest you read is Mike Bellafiore's book, One Good Trade. Mike Bellafiore is from SMB Capital. It is one of the largest proprietary trading firms in the world. And one of our clients recently went to work for them, or went to train with them. I don't know if he actually got on with them or not. But he was talking with Mike, and he said, Mike was teaching, and one of their students said, "Hey, I heard about your book from Jason, and so I that's how I came to know about you guys." And Mike sent me an email, and he said, "Hey, I really appreciate you. I heard you've recommended my book to your students, and I really appreciate that." He said, "Let me know the next time you're in New York, and we'll meet up." And I sent him a note back, and I said, "Hey, the book is excellent. I love the book. I have absolutely no problem recommending it, and next time I'm in New York, I'll look you up, and we'll go, grab some coffee or something." And the important thing to note there is Bellafiore's book reinforces my idea and the principle that I teach you guys, that what is really important is following a set of rules. And what Mike teaches, it doesn't matter whether you're doing it at home in your basement or whether you're on a trading floor with Mike. It doesn't matter. You have to maintain that discipline. You have to have a system in place. And if you don't know what you're doing, think about this. The guys who come onto Mike's floor, these guys have already been interviewed and re-interviewed and interviewed a third time, and they've been put on the desk for a trial, and only after they feel like they're the right person at the right time for the right mix on the desk, do they end up getting a spot on the desk. And once they get on that desk, 50% of them wash out. And when you hear about the regiment that they go through, when you read that book and you hear what Mike requires from them, So you got to be in the office at 6 o'clock. There's a morning war room, just like what we do here, where we talk about the markets and what's coming up and what to watch for, and everybody kind of gives their ideas. Then they go out on the trade floor, and they all trade together, and they all have headsets where they talk to each other. And Mike and the other senior traders are talking to the junior traders, making sure that they're doing what they need to be doing, making sure that they know what they're doing, constantly over their shoulder. And then after the day is done, after 3 o'clock hits, and the trading day is done, they're not done. If you're a trader on that desk, you're going to spend the next several hours going back through every single trade that you took, analyzing what you did right, what you did wrong, and then you're going to start your research for tomorrow, because when you show back up the next day, you better have ideas about what it is that you're looking at to trade that day. Now, it's a different form of trading. It's a different strategy than we use here, that we teach here, but the principles are the same. Now, I want you to consider for a moment the amount of work that those guys put in on that desk, the amount of training that they receive from the guys at S&B, because S&B is putting up their own money for this trader. They have a vested interest in making sure that guy does well, and 50% of them still wash out. Think about that for a minute, and then ask yourself a simple question. What am I doing right now to put myself in a position where I can compete with those guys? The guys who survive, the guys who every single day are coming out and fighting. For those guys, it's not about losing the $10,000 or the $20,000 that's in their account. For those guys, it's, am I out of a job or not? You've got to have that mindset. You've got to be prepared to make that kind of commitment. Otherwise, you're better off giving your money to somebody else. You certainly don't belong here, because that's what I'm going to demand of you. Because if you don't do that, the odds of you being successful here, anywhere in trading are virtually zero. You have to understand, how do you test? How do you forward test? How do you write a trading plan? How do you deal with the discipline issues? All of that stuff. And at every stage of the game here at Trade Empowered, we are actively trying to push you towards that end. Because that is what will make you successful. You guys understand that? I mean, am I getting through? I really hope I am. And then once you get to that point where you feel like, yeah, man, I've learned a massive amount of information here, and I'm really interested in going one of these routes. Do I want to go to a prop firm? Do I want to go to S&B and try and get on a desk there? Do I want to go to another proprietary trading firm? Do I want to go and start my own fund? Do I want to try and raise capital? Those are different skill sets now. You start going into raising capital, well, now you're becoming largely a salesman, whether you believe it or not, because your main mission, in addition to making money in your fund, is going to be convincing other people to give you money. And that's going to become a main part of what you do, is soliciting capital. Or do you want to maybe use the knowledge and expertise that you have to teach others to do what we're doing here? Do you want to do the same thing that you're doing right now, just sharing it with others?